Hi, everyone. Now let's talk about the death benefit and how that relates to the cash value. So these two concepts are really important for infinite banking concept. And death benefit, most people already understand for the most part. That's the amount of financial payout that a life insurance policy is guaranteed to pay at the passing of the insured person. Now, depending on the type of insurance, if whether it's a term or a whole life policy, the death benefit will act differently. With term whole life policies, that's for a fixed term, and that death benefit is some certain that is not going to change for the life of that term, whether it's 10 years, 20 or 30 years. That $500,000 death benefit is going to remain that for the time being. Whole life policies are different because the death benefits are built in such a way that they grow each year. With whole life policies, they're, mutual companies, dividend paying companies, IBC policies. They have the dividends, the benefit of which buy you additional paid up insurance, which is death benefit, and thus forces the death benefit to grow each year. So you can count on that growth over time. So pretty simple with death benefit. When we introduce the concept of cash value, this is where it gets a little more confusing. There is no such cash value component to a term policy. It's just straight pure death benefit level for the time period. Cash value, some people consider that as the equity component or how much equity you have in a whole life policy. So think of it this way. Um, your death benefit is that fixed amount upon your passing that goes to the family or your loved ones, whereas the cash value is that amount or fraction of that death benefit that you have under your control and access today. As we understand cash value, another term for it is surrender value of the policy. Because from day one, when you have a whole life policy, there is that tremendous death benefit that is technically looming, as a liability for the insurance company to pay you out in the worst case event that you pass. The only way to absolve them of that responsibility is to literally pay you out the surrender value, or that cash value, as we said, is synonymous with it. So that tells us that the cash value is literally, the net surrender value or net present value of that future death benefit. So they are intricately, tied, and it's very important to understand this relationship. Now, the cash value is also the component of, or the metric by which we determine how much we can borrow against when we have a policy. It's not the death benefit. You can't borrow all of the death benefit, but you can borrow however much cash value you have in the policy. Okay. And why is that? Well, remember, the cash value serves as your net equity marker in the policy and serves as the collateral when we borrow against it. Okay. So, and this grows every year just the same, right? And you'll understand how it grows because it is tied to the death benefit. I want you to think about a tall tree in the late afternoon. Day one, you have the policy open. Your death benefit casts a shadow of protection and safety. That death benefit is your tree. Now, the cash value, first year you open it, hopefully you're 40 feet away, 40 years away from that death benefit. You could be 40 feet away from the tree. That shadow that's cast at that distance from the tree is going to be very short because there's a big gap between the future death benefit and the present today. However, every anniversary, as we make our premium payments, we're literally stepping and marching towards the tree. Father Time waits for no one, and it's the same with our policies. They're built this way. So imagine as we move towards the tree, that shadow necessarily gets taller because it's approaching the tree that's casting that shadow. And remember, this is not a term death benefit. The whole life death benefit also grows every year. So you have this curvilinear trajectory upon, which your cash value track to follow and literally catch up to your death benefit year over year on an ever compounding basis. So it has to grow more quickly every year than the death benefit grows. So that's a little bit of a death benefit and cash value. They're related, how they're related, and hopefully this was helpful for you. Until next time, peace.